Hello, traders. It's 8 a.m. Chicago time on Wednesday, the 29th of January, 2020. Thanks for joining me today on episode 1681. Do I sound repetitive enough for you every morning saying the same things, slightly different with the dates? Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market is putting risk on. It's continuing higher in the indices. The Euro Stoxx 50 leading the pack, not by much, up 17 points in the Euro Stoxx, up 0.46%, followed by the Dow. The crude is also experiencing a lift, trading at 53.75. I did expect crude to continue its move from last week. Thursday, Friday, for a test in the $51 handle, but it seems to getting a little bit of a pop here and has come into Friday's range. But the Euro stocks, the Dow, the Nasdaq are all leading the pack. Interestingly, the bonds are up 14 ticks this morning, and the S&P is up 8.5 points, 0.26%. The euro, the euro is the weakest this morning on a settlement basis. It's down 0.19% in the futures. Gold is unchanged at $1,569.80. So overall, a slight risk on sentiment following the rally yesterday, strong rally, and the overnight session. The S&P continued to explore higher. On the calendar today, we have the Fed interest rate decision. We did just get wholesale inventories came in at slightly better. It's at negative 0.1 versus negative 0.2. Goods trade balance came in slightly worse at negative 68.33 billion for December versus 68.1 billion expected. And then the overnight session, or well, my overnight session and the open of the European markets got the German GfK consumer confidence came in at 9.9, better than the 9.7 expected. So today, the big thing, of course, is the Fed rate decision at 2 p.m. Eastern, 1 Central. That is 7 o'clock London time. And then there's a press release, a press conference a half hour after that. This is a major release. The market is expecting that the Fed is going to keep things the same. I'm going to put this up here for now. This is from the CME's site. You can see the URL at the top. This is Quick Strike, and what it's doing is it's showing the probability of a rate of whatever rate is going to be the result of today's meeting. The current target is 150 to 175 basis points, remaining the same, basically, placing that probability at 85.1% with a 14.9% probability that they would increase by 25 basis points to 2%, or they would target 175 to 200. And so that's where things stand. So overall, the pricing the pricing currently reflects the market kind of staying stable, or the Fed staying stable with their current policy. So that's coming out today. Make sure you keep your powder dry, meaning do not overextend your leverage and risk, and especially your limit for the day before that comes out. Let's take a look at what we expected yesterday. Yesterday, expecting the market to push higher. I was targeting 32.70, but of course, you know, the next areas up were 78 and 78 and 80 and a half, 81. And the market ended up pushing right through. It did not attempt to push lower. I expected some reversion because the expectation is it would open inside of the range. I would expect it to base a little bit and then move on. And guess what? It did. I'm psych. It did. It actually set up a beautiful test of, we don't really get these setups as perfectly as we did yesterday. It's a kind of become a rare occurrence, but it tested value area high. Remember yesterday I talked about this being a balanced profile despite the tail. And if you're at Convergent in real time, I cautioned for the bounce at 52. 52 comes into play from Monday even. And yesterday it held up really well. Here's what we got yesterday: just uh, a perfect setup for the long. We open up. We have a nice. We have a quick kind of minor opening swing, but then we have the real opening swing later. We open up right inside on the edge of the prior day's range, of Monday's range, and then we revert back. We push through Monday's high, and we revert back, and we push right into the prior day's value area high. That's the black line right here. It was also a stock zone. It was also a stock zone, and I narrated this setup all the way through, and then from there we just pay attention to the stock zone areas, the gray areas you see on this chart here, with a target of 78. Yesterday was looking for 78, which was achieved right here, and then once it pushed into 8050. I also commented in Convergence chat room that if we push into 80 above 8050, then the next area is 85. Here's the high of the day, 85, and the reason is that's the next set of TPOs up, and so the longs, I was encouraging longs to hang on if they were long, and that was that was a 6R 6R day yesterday. It's pretty rare to catch those, so I was very happy with that trade setup. The overall market had basically left behind what was a VPOC that was consistently moving with price as the market accepted higher and higher prices and shifted the point of control higher, and finished up. I believe it finished up great. Yeah, it finished up above one volatility sigma, almost two, um, and showed a pretty strong recovery day. This is, by the way, the kind of day, and I warned about this yesterday. This is a kind of day that gets people to think that my Elliott wave countdown is incomplete, so I'm going to stay in the short. In fact, I'm going to add to it, and so on. But in the last several times over the last few years that we have had a drop of 1.5–2%, we tended to put in a V bottom and squeeze back up and really blow those people out of the water. This bull market has really caused a lot of bears to walk away from trading, to be honest with you, and so it's overall it's not a wise way to trade. The fact is the market breached into Friday's selling day range, and so it's likely to push into that day's point of control, and it's likely to examine or test that day's range. Here's Friday's range. You can see the point of control is at 94, right up here. That's this day's point of control. Once it breaches the range, we expect it to push up there. Note that the overnight session high is 91.75. And so once we breached into the day's range, which was last week's low at 80.50, we expect 85, we expect 95 next. The closing price touch and the naked point of control are expected next. And so That's what I'm looking for still. So that was yesterday in the overnight session because we did have actually a good rotation down on the close right back into the point of control. We did have a bit of a balanced close, and so I don't expect it to run on the open. On the open, it tests down, but most of the session was spent above the closing price, giving us an overnight inventory, which is mostly long again. We are above yesterday's range right now. We're above the uh, full session VWAP and the mid. Um, and the mid. And so I am expecting this thing to crawl up to 95 from here, currently trading at 87.75. We'll see what happens, but that's how things are shaping up. The interesting overnight is despite the fact that these prices are higher, the overall delta was flat to almost to negative on the session. It didn't really move up all that much and it seems like the market is sitting sideways. Yesterday, when we were here, I talked about how heavy the overnight volume was. 469,000 is pretty heavy. Well, last night's almost the same. Last night's almost the same. We have it's lower volume, but we still have volume that is relatively high for the overnight session. 317,000 is approximately two times the recent average in terms of overnight volume. I expect pretty decent activity on the open, but let's not forget that we have the FOMC today. So I expect that the higher time frame is likely to adjust positions and then fall back off and wait it out until the FOMC decision is made. So this is a good day to sit tight and keep your powder dry. So this is CT bookmap here. And what we have here is a market that, as you know, open, pushed higher, and has been sitting sideways with, again, liquidity showing up more heavily above than below on the open. So we do have a little bit of liquidity below us in line with 32.82 through last week's low or Friday's low at 32.80.50. But other than that, we have heavier liquidity up top, and it's holding on to these higher prices and is bouncing. I expect it to wiggle, 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 and then squeeze a little bit higher. We'll see what happens. You know, we have to pay attention to what the market does versus what we think. There was a little bit of balancing, as we could see in the delta here from about 6 o'clock Chicago time onwards. But overall, so the market's really sitting here in balance. This includes this delta here includes the delta from yesterday. So anyway, so that's what the order flow looks like. Areas to pay attention to the key target at 32.95 has some liquidity, and then between 98 and 3300 also have some liquidity. The liquidity is higher up above than below. That's what we glean from the order flow picture from the heat map. Let's take a look at what's expected for today. I'm going to make this short and sweet. This morning, we're opening on the edge of yesterday's range. I do expect a little bit of reversion back into 32.81.80. I expect the market to consolidate for a little bit, and then I expect it to squeeze higher and to start to reach into 95 and then to start working its way up to 97 and 3300, 31, 3301. It may do this before or after the FOMC. This is a little bit ambitious. I'm thinking it gets to 95, 97, holds sideways, and then we have the FOMC in here. and then from there, all bets are off. It could flutter one way or the other. The market could position whichever way, depending on not only the announcement at 2 p.m. Eastern, but also the press conference at 2:30 Eastern. So we'll see how that works out. But I'm looking for the market to continue to seek higher prices, to seek sellers as it advertises higher prices. The secondary, same as yesterday, open on the edge balance, push up into 95, consolidate here for a while, attempt higher, fall back in, and come back to the open, consolidate, and then come into the FOMC. And from there, most likely we'll get some volatility. I don't know which way. The market is recovering nicely. Yesterday's push higher is really meaningful, and we have to go with the most recent flow. We're coming back into the balance that was created up here with the point of control in that area in this region here of 3285. So overall, all indications from an auction perspective from the volume profile are indicating that it's very, very likely that the market will get stuck between 95 and 85 this morning and just hang tight until the FOMC decision. Okay, I don't have high hopes for a move on the FOMC, but the volume overnight shows that there's a fair amount of activity in the market positioning, whatever that is. It could be people initiating shorts, people uh, rebuying their longs or entering longs, people hedging, whatever it is. We know that there's a fair amount of activity based on the volume that's traded versus the average volume of the S&P. Anyway, I'll leave you with those thoughts. Good luck today. Again, make sure you remain in control of your emotions. Or actually don't remain in control of your emotions, just acknowledge your emotions and then remain in control of your actions throughout the day and give yourself an opportunity to trade the afternoon. Of course, don't trade the news release itself, but chances are there's likely to be some follow through once the flutter from the news takes place. Good luck. I'll catch you tomorrow morning. Take care.